Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar took another challenge to that topside level around 75.25.35 on Wednesday and found another troubling challenge and therefore backed away. Still not quite out of the zone of seeing a further downward slide as of yet due to the technical implications. However, noting from the RSI, any upward challenges may struggle and therefore back away again from that top side and see a move down towards the support region of around 74.30. In light of this pattern here, I still feel that the bulls are likely to struggle and the bears may eventually get the upper hand and see the decline. In light of the pattern for the euro, the market may extend its rally up towards 111.70. In view of the MACD though, and also the RSI, could support this gain due to the break of 111.15. However, I'm a little bit careful, as in I'm not actually a bullish trader, so to speak, or bullish technical view due to the dollar index, which measures the greenback strength against a basket of 6 major currencies. It may rebound, although the extended downward slide that that can be viewed overnight, still expect to see eventually an upward swing. It seems that the dollar's getting a little bit of a weak sentiment due to the fact that the US job numbers viewed on Friday may come in lower. However, in light of the pattern, there is still very much potential rebound in the broader sense, and that would see the euro eventually tumble back through 111 and look down towards the 109 region. Dollar yen still maintaining above the 121 handle or 50-60 area, but still technically is weak. I feel the market will eventually bow. That is, all these longs that hold this bull trend may actually start seeing profit taking, and therefore if we see a close under 121.50-60, could see a drop back towards the 119 region. As I was saying earlier this week, I'm not a bear when it comes to sterling, and with the long-legged doji, the market was relatively firm overnight and could actually see a further progress towards the upside. In light of the pattern, and I still feel the base is around 130 and therefore looks from a break of this midway point back up towards 133 and reassess from there. Sterling Kiwi still a little bit to the weaker side since that rejection from 190. I still feel though from the technicals there is still bullish divergence there. Therefore could see a recovery in the short term and look back towards that 190 to 192 potential target. A little bit of a rebound from the hammer has given the gold outlook a little bit more potential to rise. Nevertheless, I feel the market, as it gets towards the region of 1,940 area, may struggle, and therefore, due to the lack of momentum in these two indicators, the RSI and the MACD, could easily see a return move to 1,900 and reassess. And finishing up with oil, well, since the Dragonfly Doji, there was a little bit more gains to the oil overnight and looking up towards 106. In light of the pattern, we could get to roughly around 111, but still see a very significant drop back to 103. And if so, could even see an extension further, with a base coming in around $92 a barrel. I'm not overly bullish. I think we've already seen the worst when it comes to the bull run if you were short, and I feel the last run up to 116 was an indication that the momentum in the broader sense may be actually failing and therefore keeps from a broader pattern for eventually downturn. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report and also the end of the data wrap later.